Hi everybody, it's Chris from thetraderguy.com, and you're going to have to excuse me on this video. I am sick as a dog right now, so my voice is going to be a little bit shot. But this video, as you can see, I've got the dollar yen in front of you. This is the weekly chart, but what I wanted to bring up is a couple central bank intervened intervention pairs that a lot of drama going around, and I wanted to let you know what I was doing and kind of give you an idea of why I was doing it because not everything can be taught uh, cut and dry, and in fact, some of it just basically comes from experience. The technical setup on this doesn't even really exist for because I am short. Actually, I should go ahead and say that. I guess I'm short the dollar yen. Um, the technical setup doesn't really exist. I mean, I'm more or less playing blindly off of what I think is a very obvious support level that is now resistance. I think it's dead obvious that 80 is the key to this pair. Um, for the bulls to take over, they need to break 80 and then eventually 85 because I think there's a big consolidation area there waiting to happen, but they need to break 85. Once this pair breaks 85, it's going to skyrocket. Of course, the reality is it doesn't look like it's going to break 85 anytime soon. And one of the reasons I bring that up is that we have intervention candles. We have two on this daily chart. We have this one, which did break the 80 mark briefly, but got slammed right back down and took about 5 days for the bears to come in and break the intervention levels. Now, one of the biggest reasons for this is that these are unilateral Bank of Japan moves. Now, how do I know this? Well, the Bank of Japan came out and said it was just us. It wasn't a conglomeration of central banks. Well, intervention in a unilateral fashion in a market as big as the yen, the dollar yen pair, doesn't work over time. You can see, perfect example happened just back there. So when I saw this intervention candle, I saw that it didn't break 80. I went short. Now, right now, currently, I might be up a few pips, 10 pips or something like that. It's just kind of hanging out in this 78 level. But I think over time, it does drop back down. It may be a slow grind. It may not be quick. And you know what? That's okay. I went into this knowing this. I'm also not trying to take out the intervention candle like we did last time. I'm not greedy. I'm not stupid. I'm willing to jump out of it somewhere around, I don't know, 76 and a half, maybe even 77. I might even get out at 77. We'll just see what happens. Um, I don't think it's too much to ask. Intervention by a single central bank doesn't work over time. And even if it doesn't work out in my favor, I know that 80 is and I do have a stop above 80. 80 is my point of no return. You know, the risk reward isn't here in the sense that I might be aiming for 150 and risking, say, I don't know, 170 pips or something like that. It's not the greatest risk reward trade, but it makes sense as these fail and the entire world is short this market right now. Again, this isn't necessarily something that you can teach from a technical matter, but this is an experience thing, and this is kind of one of those intangibles that people talk about in trading that you'll see from time to time. The next pair that I am going to bring up is dollar Swiss. Now, I went long this today, and this was based upon a couple different things. Um, let's go ahead and zoom out on the weekly, and you can see that a little bit of background here because you could be watching this much later down the road. I don't know. But this is the weekly chart, and you can see that there was this candle here, and that candle was the intervention candle. And it wasn't really intervention, it was basically just Swiss coming out and saying, we're no longer going to tolerate the Euro Swiss being below 120. You can see that we broke above resistance at 85, shot straight up, and came back and basically retested 85. And truth, I wish I had entered there. I didn't. So, but I knew that once we took off and I saw this nice bullish candle, that 90 would be interesting. Now, let's take a look at why I would want to be long dollar Swiss. And this is, as far as I'm concerned, this is a long-term trade. You can see that I have 500 pip markers out. And I am actually thinking that eventually I will see parity in this trade. So I'm aiming for 1,000 pips. I'd settle for 500, but I'm aiming for 1,000. And if we get past parity, who knows where this pair will end up. But let's take a look at what's going on in this pair. You have the Swiss National Bank is working against the franc. So they are fighting CHF strength. Knowing this, we know that if we fall too far, the bank's going to get involved. Now, I realize that they're talking Euro Swiss and not, dollar Swiss, but these markets all move in concert, and if they intervene, it will certainly affect all of these. I mean, it did right there, as a perfect example. This long weekly trend line has been broken. We have confirmed support. So really now the only question is can we get past here? If we get past this, I will hit my target. Um, because of the Swiss intervening and the Japanese, you really can't buy into the franc or the yen as a safe haven currency right now. That leaves the dollar by default. Currently, we have a lot of issues going on in Europe and other places, quite frankly, but especially Europe. And every time a bad um, headline comes out, they buy the dollar. So it makes sense that the Swiss are going to fight the appreciation of the franc. So people are going to want to buy dollars. They also will be selling Swiss francs as risk goes up. Even though it's not being fled to as a safe haven currency, it's still considered a quote unquote safe currency. So when the markets fly, the Swiss franc will lose value a little bit. So really, this pretty much is a one-way trade. I mean, there's really no other way around it. It may not be the prettiest trade, it may not be the quickest trade, but it is a trade that I think has legs for a very long time. Now, the one thing that I would say about trades like these is you have to be extremely patient. These are not trades that you're going to be checking every couple hours. Matter of fact, I've got a pretty busy day tomorrow. I may or may not even open up my charting platform. And that's okay because I'm not expecting this to be a fast move, anyways. I would fully expect in order to get to 95, I'm probably going to have to be in this another couple weeks. But knowing that ahead of time, it makes it much easier to deal with. Okay, guys, well, I just thought I would share a couple of oddball trades I'm in and kind of give you an idea how sometimes it's not just the technicals that'll get you into a pair. I mean, you got to realize there are a lot of traders out there who will not trade technical analysis, anyways. And as such, you'll see that sometimes these markets will move for other reasons. There is my hammer candle right there, right at 90 that I wanted to see that got me interested. I realized that there is this here, and that's my challenge right now. So that's what I'm waiting for in the 4 hour. If I clear that, it gives me even more, I don't know, confidence, I guess is a good way. So, anyways, that's my oddball trades. We'll see how they work out, and I will let you know when I get out of them. Thanks. Oh, and one other thing before I go, I just want to let you know that I'm currently working behind the scenes trying to turn the web page into less of a forum as far as the educational videos go, and make those more integrated into the web page or web pages, and let the forum be a forum. Um, it is free, so for those of you who have stumbled across this video, maybe on YouTube or something, go to thetraderguy.com, look for the educational section, and I have plenty of videos, quite a few hours of videos. It's absolutely free. There's no cost, and everything you need to get up and running. If you've, especially if you've never traded, there's what I personally have used that's worked for me over time. Hopefully you can learn a lot, and I'm always there to answer questions, so just feel free to ask. In order to ask questions on the forum, you do have to sign up for it, but that's, it's free. Again, it's just you have to register. That's all. You have to have a username, and the videos, of course, are there to show you trading, and I like to do some commentary and some writing here and there to share some of the ideas that I do have in the forex market. Anyways, guys, thanks for your patience and your time watching this. And if you got any questions, email me at chris@thetraderguy.com. Thank you.